First slide to capture your attention. Do you know that the financial markets will crash once every 10 to 12 years? Major crash, huh? And I'm going to show it to you right now. So pay attention, please. I'll go as far back as 40 years ago. Now, in 1975, this was termed as the energy crisis. This was the period of industrialization. Whereas the world is expanding, they need more and more oil. But the US and Canada were running out of oil. They could not supply the oil fast enough for other countries to industrialize. What followed was a period of hyperinflation, stagflation, as they called it. That while they're expanding, prices were literally increasing. Okay, and it was creating a big mess all over the world. Started in US, spread to Canada, spread to the UK, and down to the Far East. All right, it triggered a global recession. This was termed as the energy crisis. What happened in October 1987? Well, actually, it started in July 1987. This was termed as Black Monday. Some of you may know it, those of you who are stock traders in the room. But so that you understand what triggered it, it happened in Hong Kong. The first one started in the US and then it went across the world. This one started in Hong Kong. Started in Hong Kong, it swept across the UK. Even the stock index, the FTSE 100, in that time, in 1987, it dropped over 100 points, which is huge. And then when it attacked the US, the S&P and the Dow Jones both fell over 20%. Till today, that day is called Black Monday. That was in 1987. What happened after that? You fast forward another 10 years, was the Asian financial crisis. Started in Thailand, spread to a few countries. Philippines was affected as well. It spread to South Korea, Japan, Indonesia, Singapore, and even the Philippines. The one that most of us will remember is the subprime. In September 2008. It kind of started in March 2008, even before September. Started in March because that was when a company called Bear Stearns, not sure if you guys can remember, I'm just going through a quick summary, okay? It was one of the largest investment banks in the US. It collapsed. Fifth largest investment bank in the US was bought out by JP Morgan. And then the chips started falling. All right? Bank of America bought out Merrill Lynch. And then what happened? The big one. Which company, which investment bank fell? Anybody remember? Lehman Brothers. Lehman Brothers fell, which was huge, and it triggered a worldwide recession. After this, were there any other recessions? The answer is yes. There was a European financial crisis that attacked the pig countries. Portugal, Ireland, right? Spain. But over and above, when you look at major crashes, friends, major crashes, like clockwork, it happens once every 10 to 12 years. For those who are keen to learn more, it just came to my mind, write down this guy. This is one of my heroes, okay? Write down a name called Ray Dalio. Ray Dalio, D-A-L-I-O. This guy runs the largest hedge fund in the world, over 160 billion US dollars. He has written books, and it's free. Everyone say free. Free. Do you like free? Yes. Of course. He doesn't need your name and your email. He don't need all this landing page stuff. All right, Ray Dalio, who's a billionaire by himself. You can just type Ray Dalio, big debt crisis. Big debt, D-E-B-T, crisis. He's written a fantastic book that's available for free to anybody. If it interests you to find out how do these cycles happen. I think it's an amazing piece of work that he has done to bless the entire world. For those of you who are keen, just Google it and you can download it as a PDF. Coming back, 2008 was 11 years ago. In 2 months' time, we are hitting 2020. Ironically, the year of what you would call as perfect vision. 2020 is perfect vision. But the signs are there over my next few slides. When I say how to catch the crash, I'm obviously assuming that the crash is coming. Okay? Specifically, it will happen next year. Because it's the 12th year. Crashes come once every 10 to 12 years. I'll give you the data in a while. But what I want you to see towards the end of my presentation, more importantly, what you have to do to catch the crash. I'm not here to just give you information or a crash is coming. That is 1/3 of my presentation. The 70% is what every single one in the room has to do to catch the crash. You know why? Well, I think it's fairly simple why. But the bigger thing is none of us in the room has got another 12 years to wait to make big money. Does that make sense? Yes or no? You feel like sleeping, come out and do some push-up. I know the session normally after lunch is a little bit, what is the word? Difficult. If you need toothpicks, raise your hands. The organizers will give you toothpicks to put in your eyes. Right? To hold your eyes open there. What is the reaction when a crash comes? Write it down. For those who are not involved in Forex, today you learn. Alright? Risk currencies fall first. Specifically, there are 3 currencies that will fall when a major crash comes. Number 1, Australian dollar. Why? Why does the Australian dollar fall? Australia is considered one of the world's biggest producers of hard commodities. Alright, so iron, coal, and gold that China imports a lot out of. So Australia sends a lot of these to China. Think, in a major recession, many countries will pull back on all these imports because no one is buying. So they won't order from Australia anymore. And when they don't order from Australia anymore, the currency falls. Right? Simple logic, If you forget it, just write down Australia dollar will fall. Number 2, the Kiwi dollar or the New Zealand dollar. Why does it fall? You see, Australia is known for the hard commodities. New Zealand is known for the soft commodities. Dairy, cheese, milk, meat, sheep. I don't know, some of you would have read the news, right? That New Zealand has got more sheep and goats than human beings. It is true. No, I actually went to research this thing. They've got more sheep and goat than humans there. So think again, when a recession comes and people are holding back on their spending, they are not importing all these sheep and goat and meat and milk anymore. People still need to eat, but they'll eat cheaper stuff. The New Zealand dollar falls. The third one that will fall is Canada. Why Canada? Crude oil is Canada's largest export. I need you guys to think that every country, by and large, runs it like a business. Philippines is being run like a business as well. All countries are the same. Right? Some of your biggest exports, fruit, bananas, electronics, garments. Philippines is known for that. Okay? So, Canada, the Canadian dollar will fall during a major crisis. Why? Because everyone is holding back. I'm not going to be expanding my business. I don't think I need so much oil. It starts to fall. So, if you are smart enough to think of step 2, during a crisis, if these 3 fall, your job is to buy or sell these 3 currencies. Buy or sell? You must sell. You must click sell. Okay? This is 3 now. Let me give you the other jigsaw. Because in the Forex world, you are technically trading one currency over another currency. It's 2 currencies that you are trading, right? Okay, so let me give you part 2 and then I'll join it together so that you're crystal clear. What is the reaction for part 2? Safe haven currencies will rise. Everybody says safe haven. Safe haven. Let me teach you all these big words so you can impress your friends now. They'll ask, what did you learn from Mario? When you got out of Mario's session, what did you learn? I couldn't be there. You can tell them, I learned this big word called safe haven. Alright? So safe haven currencies are basically countries that money will move into because people feel that it's safe. For all those investors or fund managers in the room, you have always wondered why in the world, how does money move around the world? Money technically doesn't disappear. It just moves and is being created every day by the central banks. There are 3 main areas where money goes in times of crisis. It has been like that for the last 30 to 50 years. It's not going to change anytime soon. Write it down. Number 1, the US dollar will rise. It will rise. I could not understand this for the longest time because to me, the US is basically a country that's bankrupt. They've got no money. They are borrowing like crazy. Why in the world does the US dollar rise? I could not understand it until over the years as I'm studying, right? You look at my explanation there. The US Treasury bill, which is basically the notes that they use to issue to borrow money, bonds in essence, right? The US bonds. They are the most trusted bonds in the world. Why are they the most trusted bonds in the world, even though they are bankrupt? Is it because at the back of your dollar bill of the 4 words there, in God we trust? Is it because of that? Maybe, but I'll tell you the biggest reason. So that again you look smart in front of your friends. Why does the US dollar rise? Because even though they are in shit, they have never failed to repay back all their loans. They have never defaulted on their currency before. So because of that, people think, okay, they are fairly safe. But all that they are doing is basically just printing more money. Okay? But the fact of the matter is they have not defaulted on their debt. So because of perception, and perception is important in the world, people feel the US dollar is safe. That's reason number 1. Number 2, which country will rise in their currency? The Japanese yen. The Japanese yen. But for different reasons. Look at the reason here. Japan has one of the world's lowest interest rates. One of the world's lowest. Very different from Indonesia, which has high interest rates. Different countries run differently. It has low interest rates, and the last 4 words are very important. Large current account surplus. Let me explain these words for you. You see, every country, look, pretend I'm Japan. You are all the other countries. What are some of my biggest exports in Japan? Anybody? What does Japan export a lot of? Toys. I heard toys. Cars. Toyota. Honda. Yes or no? Right? You will see all this. So they export a lot of these all over the world. So money comes into Japan. Japan is very self-sufficient. And what compounds is that the Japanese people don't like to spend. They are all savers. Okay? It is so bad in Japan that people are not spending that if you were to put $100 into a Japanese bank, after 1 year, you will withdraw out 99. Wow, you mean Mario got banks worse than Philippine banks? Yes, there is. You will actually draw worse. Why? Because they have something called negative interest rate. That means, why would people even do that? Think about it. They are doing that because they feel that if they were to put the money elsewhere, they would lose more. Do you understand? This is the thinking that Japanese have. They prefer to save it in their own banks. Now you put 2 and 2 together. The fact that Japan exports more than it imports, meaning to say the money they get from selling all these cars compared to what they are importing. So assuming when they export, they earn 1 billion. When they import, they have to pay. Example, Japan imports oil. All right, when Japan imports oil, maybe they pay 500 million. So what they earn minus what they pay, they have excess. It is the same when you run a good business. When you run a good business, you want to make money or lose money? Some still not sure. Of course want to make money, right? So Japan is making money. Making money from the world, plus I can tap the money from my own local people because the money is in the bank. They are not spending. They are saving. Put these 2 together, listen. So when a crash comes, Japan, they are strong. I've got money. Number 2, the knock-on effect. Because people think that, because Japan is rich, that's why they are safe. More money now starts to flow into Japan. This is the safe haven effect. Do you understand? Because people think that they are safe. So when everywhere is crashing all over the world, fund managers must always find a place to put their money. They will move it into Japan. Okay? Clear so far? Yes. Am I making sense? Yes. Are you enjoying this session? Yes. Let's raise the energy a bit. Let's give everyone a big hand. Number 3. What else will rise? Gold. Gold and to some extent silver, but gold more. Right? Why does gold rise? Simple. Because gold is a limited commodity. Not much gold in the world, right? Alright? There's going to be a lot of demand, but very low supply, so prices rise. You can't print gold, you know. You can print US dollars, you can't print gold. So that's why the price of gold will rise in a financial crisis. Okay? Now, you put all these together. You put it all together to summarize. What are the three currencies that will fall? Can you remember? I have no idea what you just said. The Aussie, the Kiwi, and the Loonie. The Loonie is called the Canadian dollar. So these three will fall. But in Forex, you trade the currency pair. Just like USD stroke PHP equals whatever exchange rate. Similarly, you have to trade AUD stroke something. So three, well, I think I put two here because gold is by itself. What will rise is USD JPY. What will rise is USD JPY. So, if you put it together, if you put AUD stroke USD, will this exchange rate go down or go up? It will go down, huh? It will go down. Look at it from the left-hand side. This is where Forex may get just slightly confusing at the start. Just remember when you pair it up, if I had a board here, I can write it, but just note now. AUD stroke USD will fall. AUD stroke JPY will fall. NZD stroke JPY will fall. Alright? Meaning to say, let me give you an example. If AUD USD equals 100, it will drop to 90 or 85 because the Aussie dollar is weakening. Okay? I'll show you some examples so that you get clearer. Huh? This is the most important slide. I allow you to take picture if you want. Okay? You have to remember this, friends. This will be your template for you when markets actually crash. Okay? Now, let me give you an example. Now, this is where the charts itself will naturally wake you up. Huh? I don't need to wake you up. If you look at the top there, it says NZD USD. That means the Kiwi dollar versus the US dollar. Is this chart going up or going down? You will notice at the top, it is dropping from maybe 81 cents, 81 to 72 cents. Okay? That means over 2 to 3 months, Kiwi dollar versus US dollar is 81 cents. That means 1 Kiwi dollar equals 81 US dollars. Sorry, 1 Kiwi dollar equals 81 US cents. And because of the crisis, it falls. The Kiwi dollar, the value is dropping. Okay? Over a few months, it was 81 cents. After 3 months, it is worth only 72 cents. How many cents is that? That drop from 81 cents to 72?
9.
How many, 9 cents, right? Listen very carefully. Come closer. When you don't trade the Forex world, you would make 9 cents if you click sell. Big deal. 9 cents is nothing. When you step into my world, and when you trade it on a Forex platform, that 9 cents will equal 9,000 US dollars. I'll say it again now. That 9 cents drop equals 9,000 US dollars. And you don't even need to put in 9,000 US dollars in your account to make this kind of money. This is the reason why. When people ask me, Mario, why are the Forex traders making big money? It is because the platform allows you to do so. The Forex market today is the largest financial market in the world. It is much bigger than the stock market, the futures market, the oil market, the gold market, the crypto market. I'm not sure if some of you have read the recent news. The Forex market today trades 6.6 trillion US dollars in one day. 3 years ago, that number was 5.1 trillion. And already at 5.1 trillion, it was already the largest financial market in the world. Today, as of 2 months ago, September 2019, the latest report, 6.6 trillion. A 30% increase from 3 years ago. Is that good or bad? I think it's awesome. I think it's awesome. Why? Because then it means it has enough to feed everybody in the room again and again and again. Part of the reason why for the last 10 years I've been doing what I'm doing Because you're not making money off me now. We are making money together from the forex market. Isn't that awesome? Yes or no? Yes. A $6 trillion market has got more than enough to pay everybody over and over and over again. Let this sink in for those of you who have not taken this step towards the forex market. A 9-cent drop will equal 9,000 US dollars in your bottom line. And I'll leave it to you to decide how that will change your lifestyle. The second chart in Aussie USD. Okay? This is basically Aussie versus US dollar. Look at the dates. The dates I wrote there is specifically when Lehman Brothers collapsed. So that's September 2008. This is 11 years ago. All right? It dropped from, what is that? 85 to 60, which is a drop of 22 cents. 22 cents was 22,000 US dollars. The beauty of the forex market is this, if you get it correct, if you're just following the momentum, you click sell and you let the market write you down. Today, if I'm addressing you for the first time, this is step 1. Step 2 is what is going to kill you, your own psychology. Because this will mess with your mind when you start to see, shit, you mean I'm making that much money? And you'll start to do, I don't have a better word, you'll start to do nonsense with your account. That's when you cannot manage your own mind. But that's part 2, when you guys are walking this journey with me, which is why I feel I've got to be adding more and more value to you. But in terms of strategy, you better understand what is going on first. Is this clear so far? Is this crystal clear of what you must do? Well, you don't have to click sell, but you don't click sell, your life remains the same. So that's entirely up to you. Okay? Third one, this is the Canadian versus yen. Canadian dollar, I told you, Canadian dollar will drop, Japanese yen will increase. When that happens, the entire currency pair will have a huge fall. Okay? This was a drop of over 3,000 pips, which is essentially 30 cents. You would have made 30,000. The forex market pays you 1 pip, 10 US dollars. Not 10 peso, 10 US dollars. What is the meaning of 1 pip? Go and Google it today. It is a movement of 0.0001. That is not even a currency, my friends. A movement of 1 out of 4 decimal places. The forex market pays you 10 US dollars. So you see, today I'm helping you to open your mind. Is making money easy? Is it difficult? I'll give you the clue. Get yourselves in the right game. Get yourselves in the right game where the rich are playing. Now, it doesn't mean that the rich are playing that they somehow possess some kind of information that you don't have. The whole world is flat today. It's a key question of whether or not you will take the action that all of them have been taking all these years. Today, you make the decision to do the same. This was the classic one where the Dow Jones fell, the Nasdaq fell, the S&P fell. So this was in 2008, right? Classically, the Dow Jones fell 666. But if you go back and check, it actually fell over 700 points. But this was a screenshot that was captured. It fell 666 points. When the markets fall, the Dow Jones will crash, the Nasdaq will crash, the S&P will crash. These are the top 3 indexes around the world. Okay? So Nasdaq here fell by 323. The S&P fell by 198. So this again is in 2008. This is what happened in the last crash so that you can prepare for what is about to happen. Now, here's the good news. On my platform, on the Fullerton Markets platform, you can be trading a whole host of instruments. Right? I have over 60 currency pairs there that you can trade. But do focus on the Aussie yen, Kiwi yen. Focus on that permutation in the previous slide that I told you. But if you want to go one step further, we obviously have oil, gold, silver there. If you want to click buy for gold, because gold will rise, and you can click sell for those 3 indexes, the Nasdaq, the S&P, and the Dow Jones. All 3 will fall because people are cashing out of the stock market. Okay? They are moving it all into where? They will also put it in US dollar, US bonds, they put it in Japanese bonds, they will put it in gold. Alright, you can trade all of those on the platform as well, available to you. We are heading towards the end of 2019. What am I seeing? I wrote a report about 4 to 5 months ago, which I want to share with you today, because I think it's important that you guys know about it. All right? Now, so this is something I wrote on my Facebook page. All right? Just pay attention. I want to share with you the extent of what is happening. All right? You must know. In July 30th, I wrote this piece called The Perfect Storm Before a Global Recession. 4 to 5 months back, right? Just pay attention to some of those points there. Listen. India has cut rates to the lowest in 9 years. Australia has cut rates to 1%. Today they have cut rates even lower than 1, but that's beside the point. Korea has cut rates for the first time in 3 years. Turkey had its biggest rate cut in 17 years. The first clue in your minds, friends, today is a crash course that I need you to understand. I hope you get it. When central banks are cutting rates, it is never a good sign. Think. I want you to think like a central banker today, like your BSP here in the Philippines. When central banks cut rates, the effect that they want is 2 things. Listen. Number 1, they're trying to tell you, I cannot afford to be paying you so much interest anymore. That they can say however they want to say. I'm telling you what they actually mean. Alright? And what they actually mean is that they cannot afford to be paying you that interest anymore. Is that a good sign or a bad sign? Bad sign. So when central banks are cutting rates, bad sign. This is the first thing that they're telling the people. The second effect that they want, they hope businesses will borrow money to expand their business and stimulate the economy. Do you understand? Because when interest rates are low, they hope that the businessmen will take out loans. They hope they will take it out to expand the business, buy more machinery, buy more buildings, things like that. Essentially, they need the help of the people and the businesses, all right, to stimulate the economy again. That's why central banks are cutting rates. And you look at the extent that they are cutting. I'm here to give you this information because I've read it, all right, friends. Listen to this very carefully. Lean closer if I don't tell you. Make a wild guess. How many central banks have cut rates this year? A guess lah, more fun. Give me a number. How many? 20? Some more? Want to phone a friend? Over 40 central banks around the world have cut rates this year. 40, and counting. I'll show some of it to you. So these are the ones. India has cut interest rates to the lowest level in 9 years. This is one of the biggest economies in the world. Lowest level in 9 years. South Korea cuts interest rates earlier than expected. First time in 3 years that South Korea has cut rates. Turkey. All those countries that I showed you, I visited them this year. I was giving a keynote speech in Istanbul, in Turkey, where I told them about this thing that their country was doing. Right? They cut rates to the lowest, the biggest cut in 17 years, man. These are big things that we have to know so that we can be prepared to do when the crash comes. US the Federal Reserve has cut interest rates. This was the first time they cut, all right, ever since the first interest rate cut in more than a decade. But the updated one, this year alone, the US, which many countries will take a cue from, has cut interest rate 3 times already. 3 times, this year alone. Okay, that's the latest news for you. The European Central Bank has cut rates. Australia has cut rates to a record low of 1%. But the latest, because this one I did it in July 2nd, I re-updated it. 1st October, they cut rates again. And what did I tell you about the Australian dollar? They have cut rates again. Okay, because not many people are ordering all these commodities from Australia anymore. They need other measures. And one measure why the central bank cuts rates, like I told you, they don't want you to save so much. They prefer the people to take out the money to spend and stimulate the economy, and they want the businesses, all right, to borrow loans. Now, This is the backdrop. I'll finish off with a few slides that's gonna help you. So, when I say what trades to look out for over the next few weeks or the next couple of months, that hopefully when you guys take action and make money, right, you can feel free to Instagram me, Facebook me, let me know. Share your results with me. What trades to look out for? Number one, will gold go up or go down? Okay, let me explain this so that you're clear. You will notice that when gold is priced, it is priced in US dollars. So XAU USD. Alright, XAU USD. Now, in XAU USD, if gold will go up, how come US dollar will drop? Huh? Hey Mario, I thought you said US dollar will strengthen what? I don't understand. Good question, let me answer you. Because gold is priced in US dollars, and gold is considered a stronger safe haven than the US dollar. So while both will rise, gold will rise more. Understand? That's the way you think about it. And that's why the XAU USD, that price will go up. So your job is to click buy. Because gold cannot be printed, US dollar can. Okay? So gold will go up. Huh? So some of you who are a bit technical in the room, if it bounces off that blue support line, feel free to go long. Long means buy. Okay? Number two, the Australian dollar will fall. I've already given you the direction. Aussie dollar will fall. It's already been proven in the interest rates. Alright? Where is a good time for you to click sell? Where? You already know what to do. The question is when to do it. So if you see these two blue lines on the Aussie dollar chart, once it bounces off the top line, now that is called your resistance level, for some of you who are technically trained. If not, it's just the top blue line, okay? When it reaches the top blue line and turns down, click sell. Click sell. That is the right time for you to sell because it will continue to drop. The Aussie dollar will drop and has dropped in all the major crashes. Next one, which is also a permutation of the Kiwi dollar. You can trade the Kiwi versus USD or Kiwi versus Japanese yen. Clue for you. Between USD and JPY, it is my view that JPY will strengthen more. Which means the Japanese yen is a stronger safe haven currency, alright, compared to the US dollar. So for this one, when is a good time for you to sell? Where do you sell? Similarly, when it bounces off that top line. When it bounces off that top line, that is a good time for you to sell. Friends, you will have unlimited chances for you to play the Aussie, Kiwi, Canadian dollar with US dollar and Japanese yen. You can permutate all of it because one side will drop, one side will increase. It's up to you how to trade it. The one that will fall the most, well, actually all will fall. Right? So Aussie, Kiwi, Canadian dollar will fall. The yen and the US dollar will rise. And gold will rise. If you forget everything I say, did you remember that last part? Yes or no? Do you remember what you must do? If not, you waste another 12 years. I'm not shitting with you. Okay? I took the time to come here, guys. I really hope you get this, okay? The Aussie, Kiwi, Canadian will fall. I'll say it again. The US dollar, the Japanese yen will rise. Gold will rise. Clear? Yeah. Okay. I never understood this quote until I stepped into the forex market. Never understood it. What did he mean? All right? Be fearful when others are greedy, but be greedy when others are fearful. You know, one of the best cases for me, in 2008, in Singapore, there's a famous billionaire called Wee Hong Leong. Wee Hong Leong, right? When Citibank crashed, the price of Citibank shares were $56. You guess it crashed to how many? $4. He bought like crazy. He sold it within 1 or 2 weeks. He made some shitload of money, $5 or $10 million. Be greedy when others are fearful. It was one of the best statements. The deeper I am in the financial markets, I thought this is one of the best statements by the king of investing, Warren Buffett. You must take the action. It means nothing to you if it all remains inside your head. translate that knowledge into action. Which means what? What is the meaning of action, Mario? Click the mouse lah. You gotta click the mouse. Your hand will shake, right? Shit, Mario said I can make 20,000 US. Of course your hand will shake. Use the other hand to hold it lah. But still click the mouse. Okay? Okay. Came all the way here. I wanted to do something special for you. How many of you want a special offer? Raise your hands. Okay. Now, on Fullerton Markets, which is a brokerage firm that I founded, I have something called an exclusive bonus for you. Please take note of the link there. It is only for